Hello, and thank you for tuning into my channel again. This is the US Futures Weekly Chart Analysis for the week ending 23rd of December 2022, second to last week of the year. As usual, we start with the US dollar index futures. We'll put some lines in. We can see where we've been, where we might be going, where price was pushing higher. You can see that the thrust began to contract here, and price wasn't able to continue higher there. Price broke down. Here's the breakdown bar. There was a little period of consolidation before price broke down a second time. The market's attempting to recover at the moment. There's been no intent to push lower since this bar broke down a month back. In fact, it appears there was some buying support come in on this bar, and price is recovering around the 105 level or just below it. The lows of the range are there. This is where price would go if weakness continues to come in. I expect this market is going to attempt to consolidate sideways for a period probably between this level and this level, something like this, at least in the near term. There's no obvious sign of a breakout, and the buying support that came in here suggests that the market won't easily break down and test this level. So I expect price is going to attempt to go sideways and consolidate in response to two breakdowns. You see the first breakdown bar was actually really wide and strong, but the second breakdown bar, that's this bar here, was much narrower in comparison to the previous breakdown bar, and thrust has shortened here, similar to how thrust shortened there. So I don't actually think this market really wants to go much lower. It's probably going to attempt to move sideways in some form of consolidation. Next chart is the E-mini S&P. This is S&P 500 index futures. And this market did move up and just tag the overhead resistance. And I expect this serious weakness that came in here, or what appears to be serious weakness, was on some form of announcement. The interesting part is, while it looks like a breakdown bar, this is not a clear breakdown. This has just moved a fraction lower than the lows of the range. What makes it look really weak is that it was initially trading much higher and then lost all of those gains to close as a down bar and below the lows of the range. So it makes it look like it's a serious breakdown bar, but it isn't really. In fact, price is attempting to consolidate now and hold on. It's well above the lows of that bar in here, and this market is reluctant to move lower. If it did, here's the next lower level, and here's the lower level below that. So if really strong weakness comes in, you would expect price to come back and test this level for strength, and this is the level just below that. But I'm thinking this market is looking like it's attempting to consolidate here, just in the shadow of this level here, just below it, in the relative safety that often forms just below a breakdown level. If price had really seriously broken down, then you'd have a lot of supply being drawn out. But it hasn't clearly broken down, and the next bar is a consolidation bar. So I don't think this market really wants to go lower. The highs of the range are probably up here. This may be another market where price may attempt to trade sideways in some form of consolidation, at least in the near term. The US Treasury 10-year note futures traded lower this week. We'll put some lines in. You can see where we've been and where we might be going. Price pushed up to the range here after we saw some buying support come in through here. Price pushed up to the highs of the range there, and even tested for supply, but there was no more oomph left in the market. There was no more force or effort to push above that level. And in fact, some weaknesses come in this week and prices closed just below the lows of this test bar here. The next interesting level comes through there now, and you may find that tested next week. That's 112 and a quarter. I would expect, if the weakness continues, the market to come and test that level next week. I think the 115 level is definitely the highs of the range, at least in the near term. And if continual weakness comes in, 110 is where there's been previous support below that. I'm thinking this is another market where price may attempt to consolidate sideways between the highs and lows of the range. Obviously, if the weakness continues, 110 comes into play. I don't see the market easily pushing above 115. So the 112 and a quarter to 115 might be where price attempts to consolidate in the near term. Copper price futures showed quite a bit of resilience back here, which perhaps in hindsight may prove to be an accumulation, sort of here and then here. It was difficult to tell at the time, although we did suggest it a couple of times, but I wasn't sure. Here's the highs of the range. There's a little shelf in there where price had to push above. You can see it accelerated higher here, but I was a bit disappointed with how deep this period of consolidation was, and mentioned it at the time. But price did consolidate. This narrow spread down bar on very low volume suggested selling pressure was then quite low, and price pushed up in response. And this period of consolidation since then has actually been quite high. That looks much better. That looks much stronger. The next level above is in here. It's a zone of resistance that you would expect some selling pressure to emerge. So if trading conditions become favourable either next week or early in the new year, I would expect price to attempt to push up to this level. Now, this may be a bit more difficult for the market to negotiate a path through. It's too broad, more than likely, for the market to gap into and push above. So if the market does push up to this level, the most likely result would be a period of bullish absorption where the market pushes up like this. But we're yet to see that. We need to see price push out of this period of consolidation here. It's looking much more promising than it did back down here. You've got strength in the background, this accumulation zone. So I would expect the market is well placed to push higher given any sort of favourable trading conditions. After that, this zone between 425 and 450 is where overhead resistance is. And above that, most likely in here, I haven't really looked at that very carefully yet, but you can see where that congestion is. There'll be some more just below the 475. I'm not expecting this bit here to cause too many issues. I expect if people did buy in there, they probably aren't continuing to hold, particularly when price broke down here and then was unable to recover there. So I don't expect there'll be a great deal of selling pressure still being held there. There probably is some in here, in there, and there definitely will be some in there. Just how much, we'll have to wait and see. But given any sort of favourable trading conditions, price is likely to push up to the lows of that range, which is sort of 420. And we'll see what happens from there. Gold price futures also have some consolidation in the background. This is strength in the background here now. And price accelerated higher here. Now you can see from what I just said on the last chart, the period of consolidation was really high. And in response, price did push higher again. Now you've got the breakdown line from previous coming through there, and it's likely to last up to there. This is where resistance is going to be, where older selling pressure may emerge from. And in response, you can see what the market's doing, just what I said before. It's moving into an absorption pattern, like bullish absorption, and that may go on for a while. It's a fairly easy way for the market to push through a previous level of resistance where you would expect some supply to be drawn out from previously. And that may go on for a period of time. It can steepen slightly or it become more shallow, but barring a gap into an area and an acceleration higher, the next most common way to negotiate a path through previous resistance, especially a broader zone like this, is for some sort of absorption, which I call bullish absorption. And that's what looks like it's forming at the moment, although it is early days. Above that, you've got a level probably here where there's likely to be some supply holding there as well. So we'll just see how things go. I expect the market is currently absorbing its way through the supply being drawn out to the left from this zone here. And that's what's going on at the moment. But it looks quite good, really. It doesn't look bad anyway. Silver price futures. They also have strength in the background, similar to gold and copper. And there's been a period of consolidation and buying. This is the strength in the background. Price broke out here above the range over 2 weeks. Here was the breakdown bar, which forms sort of the highs of the range. And price came back and consolidated over a period. Now, here's the push out. You can see how much higher in the range the consolidation was. That's generally a sign of strength, and in response, prices pushed higher. There's a period of testing for supply there, and the market was so strong it ended up as an up bar. And you've got another period of consolidation happening right now, just through there. In fact, this may also be forming some sort of absorption pattern, like bullish absorption. You've got the breakdown line from previous coming through here, and the overhead resistance through there, probably lasting up to there. This is where supply is likely to be drawn out from. So you may see price attempt to absorb its way through in a similar fashion to what I was saying before on the gold chart. It's a common way for price to work its way through a previous area of congestion where supply is likely to be drawn out from. And that looks like what's happening at the moment. Like crude price futures have been really messy recently. Here was the initial lows of the range. Price broke down here. There was an attempt to consolidate through there. Price broke down again, but buying support came in and price pushed higher in response, back up to the lows of the range again. There was a period of consolidation, although it wasn't as high as you might like to suggest the market was really strong. There was a secondary attempt to push back above the lows of the initial range. Here, price broke down again, continued lower, and now price has found buying support come in again. Volume was really quite high here on this down bar, but the next bar was up in response, and so was last week's bar. The overlapping of the bars is becoming a little awkward. The lows of the range go through there now, and the highs continue to be the initial highs of the range when price really pushed higher way back here. I expect price will get up to this level given any sort of favourable trading conditions. This next level above that will be more difficult in here. This is 84 to 92. That's much more difficult. and a breakout would come if price pushed above that. You're probably still going to have some supply drawn out from this congestion to the left if price was to move higher like that. And if price is to continue lower, you've really got pretty good support coming through just below 70, and there's the highs of the range there, and that's where price found support 3 weeks ago. So this is the support zone. You've got some pretty awkward trading to the left now. I expect there'll be some supply drawn out from this level here. So really price should be able to move up from this 80 level to this 82 and a bit level. If there's any sort of favourable trading conditions, the market should be able to move up to that level. Then we'll see what it does after that. There is likely to be supply above 82 and a bit to 92. We'll just see how it goes. Aussie dollar currency futures have really just been trading the inverse of the US dollar more recently. There was some buying support found at the lows of the range, and price has been grinding through here for a while now. This week's bar perhaps was an anomaly. Maybe it was because of the low volume and holiday trading, we'll see, but it doesn't really look particularly strong, just as the US dollar is looking perhaps a little bit more stable. So that's possibly why the bar formed as it did this week. The low volume suggests there was no real oomph in the market. There was no force or effort behind the trading. It was a bit of a nothing bar, and it closed above the lows of the previous two bars, but made no attempt to challenge the highs of the range, which are around about 68 cents at the moment. So a bit of a nothing bar, but certainly doesn't look weak there, but doesn't look strong either. Bitcoin futures, perhaps the best thing about Bitcoin futures at the moment is after this serious weakness came out here, there's been no response lower. The market has stabilised quite well. It's just trading above this 16,000 level, which is possibly the important level in the near term. I don't think price is going to continue lower at this point in time, although that is still debatable, but we've had 6 weeks since that happened, and the market's had the opportunity to move lower, and it hasn't done so. And this high volume here suggests that some buying support, albeit modest, did come in. So I'm expecting price to continue trading sideways, get itself away from the inferred weakness that happened back there, and then make some sort of attempt to move. Now you've got some compressed levels above it, which will cause it some difficulties in the near term if it does try to break out. It may do this sort of thing before it actually attempts to move higher. And if weakness was to emerge or some other serious issue was to emerge, the 10,000 is the important level. It's sort of between 8 and 12,000. There's a zone in there where the market would likely move back down to. But I'm thinking sideways is the best move at the moment. There's no obvious sign price wants to move lower, but there's no obvious sign price is going to break out either. It's in a recovery pattern. It's in a consolidation after the serious weakness emerged 7 weeks ago. And just back to the US dollar index quickly. You can see where price broke down here. This was a pretty serious breakdown. And the secondary breakdown here was nowhere near as strong, and price has consolidated since. I think the market is reluctant to move lower, and it may continue sideways in the very near term around the 105 or just below. I don't think it wants to go lower. If it does, this is the level it will be looking for, the next level below. But I'm still unsure on whether that's going to happen. You may find the market just trades sideways for a period, That looks like the most obvious outcome for a lot of the markets, perhaps apart from the miners and the precious metals, which look more like they may continue higher, albeit in a grinding fashion rather than a real acceleration higher. Okay, that's my lot for the week. I'll be back next week with the end of year weekly chart analysis. Thanks for your time. See ya.